Let's talk about UK dividend stocks that have announced dividend increases. There are often two main reasons as to why a company would increase its dividend payout. The first one is that they are seeing a rise in their net profits and they're improving their cash flows. And so because of this, they can afford to pay more dividends to their shareholders. The second reason is that the company, for whatever reason, has decided to redirect its cash flow away from growth and expansion into dividends. And since dividends represent a proportion of the company's profit, typically speaking, an increase in dividends generally represents a healthy future for the company. But that's not always the case, of course. Sometimes a dividend increase can actually be an indication that the company is running out of growth and expansion ideas and opportunities. And because of this, they're deciding to redirect their cash flow and invest into their shareholders instead of actually investing into themselves, into growing their business. However, it's not always as clear cut as that, because sometimes there may be good reason as to why a company temporarily puts a hold on growth and expansion. For example, size of the company and production capabilities can be two reasons as to why a company may decide to momentarily put a hold on growth and expansion and redirect those cash flows into dividend payments. And hopefully you agree when I share this list with you that these are more often than not really good quality companies that people may want in their portfolio. Of course, on the flip side to all of this is that a high dividend yield can be dangerous and can lure investors in and actually be a way that companies cover up some issues that are going on in their fundamentals. So definitely watch out for that. But I've tried to pick companies here that either one, I have myself, so of course I think they're good companies, or two, are companies that at least a lot of people have heard of or heard their brands of and may be a good addition to people's portfolios. So let's jump in to the 3 companies that have recently announced a dividend increase. The first one is one that I hold near and dear and close to my heart because it's one that I've recently added to my portfolio and I am definitely looking to add more in the future, and that is Unilever. They are a consumer goods global massive company with over 400 brands. And honestly, these brands are brands that you probably have in your house right now. Just looking at this picture here, straight away, I can just read out some really popular and prevalent brands in the UK. So we've got Vaseline, we've got Wool's ice cream, Hellmann's mayonnaise, Dove, Comfort, Slim Fast, Persil. The list goes on. And these are just the UK ones. As I said, this is a global company. So some of the brands that they've listed on their website and that I see in front of me aren't ones that perhaps I've seen in the shops near me, but they're going to be ones that are very popular elsewhere. On the 27th of October, Unilever announced a dividend increase, increasing their dividends from 36.33 pence per share to 37.22 pence per share. And this was an increase of 2.45%. Unilever are one of those really trusted brands, and they're actually able to have pricing power because of how trusted their brands that they sell are to the general public. And they're actually able to pass some of the inflation that they're feeling on to the consumer. And yet, even after doing this, they're still seeing really good growth and great sales. And that comes down to how many years of experience they have had in all sorts of macroeconomic markets. And of course, just the sector that they're in, the consumer goods sector. If you haven't watched my recent video, they do tend to do well in times of recession and high inflation. And like I was just saying, brand loyalty really comes into play here as well. The latest earning report that got released shows really good strength, and it's really great to see that they're still able to increase their dividends no matter what's going on in the economic market. And as someone that holds this company, I'm really chuffed to see this. Unilever pay 4 times a year and their dividend yield comes in at 3.6%. And we can also see, looking at their annual dividends, that they have been increasing their dividends for a fair few years, with a slight drop in 2020 as expected. This is taken from the company's website, and you can see here that it tells us the 4 months that they pay per year, so March, June, September and December, so quite nicely spread out. And you can also see the ex-dividend date here, so this is telling you that in order to get the next dividend, which is the 9th of December, you have to have money invested into Unilever before the 17th of November. So that's coming up very soon. Over the last 1 month, Unilever are up by 4.5%. 6 months, 10, nearly 11%. Year to date, 2.28%. 5 years down by 3.24%. And then we max it out and we can see how powerful this consumer goods company is and how long they've been around for, really. This track record plus dividend increases is really, really fantastic to see. The next one on our list today is Bluefield Solar Income Fund. Bluefield Solar Income Fund is an investment company focused on the acquisition and long-term management of a diverse portfolio of less carbon assets in the UK. So they're featured on the FTSE 250. So this isn't a FTSE 100 company, it's a FTSE 250 company. You've got some information in the numbers here, but let's have a look at their portfolio. As you can see here from their portfolio, they have assets all around the UK, but they're not so diversified elsewhere. They don't have any assets in Europe or anywhere else. They're concentrated purely in the UK. On the 30th of November, they announced that they were increasing their dividends from 2.05 pence per share to 2.09 pence per share. So that's not a crazy increase. It's an increase of 1.95%, but it is still an increase in dividends nevertheless. So just to put that into some context, 100 shares of Bluefield Solar Income Fund would pay you £2.09. And to buy 100 shares of this fund, it would cost you at the moment around £130. So we can see that just by this dividend column here, they have been increasing their dividends for a fair few years now, but they haven't got like loads and loads of years to show that they've been increasing like Unilever have or other companies have. But it's still a good sign nevertheless. And we can see here as well, the ex-dividend date to get paid for the 4th of November was the 13th of October. So we've missed it this time, but it's a good sign for the future if they do continue to increase their dividends. They are also a quarterly dividend payer. And let's just take a look at their yield, 6.2%, which is quite high actually. And the annual dividend chart, like I said, there's not many years and it looks a bit all over the place. But if you start looking at this properly, you can see that they've increased these 3 years, then a drop, and then an increase again. So I think we need more data on this company and we need to look at their fundamentals before deciding, but they could be a good shout if you do look at all that and it all checks out. And I should also say that the months that they pay are November, August, June and March. Just taking a look at their performance here over the last 6 months, down by 5%. Year to date is actually up by nearly 5%, so that's quite good. We've got some crazy dips here going on. 1 year up by 7.2%, again, great sign. 5 years, 13.21, and if we max it out, like we've just said, they've only been going since 2013, so there's nearly a decade of data, which seems a lot, but if you compare it to a lot of other companies, it's not a lot. However, with the sector and the industry that they're in, it's more upcoming, isn't it? So solar, solar energy, it probably wasn't around as much a few decades ago as it is now. But yeah, we've got some good performance here. Do let me know if you hold this one and you want to add anything important for other investors. Leave it in the comments below. And the third company on my list today is Associated British Foods. And this company is a really massive company. They're food processing, but also a retail company, which I never knew. So let me go onto their website and actually show you some of the brands that fall under this parent brand, because I was quite shocked. So this is their portfolio, and straight away up here, we can see lots and lots of brands that we will know. Jordan cereal, Twinings, all of these, Ryvitas. And we can start looking through these and we'll see lots and lots of different food processing brands and companies that we recognise. But if we just go on to P here, interestingly, they are the parent brand of one of the largest fashion retail groups in Europe, which is, of course, Primark. Now, I may have been living under a rock, but I didn't know that Associated British Foods actually owned Primark. So there you go. Let me know if you also didn't know that. On the 8th of November, they announced that they were increasing their dividends from 13.8 pence per share to 29.9 pence per share, which is actually a really big increase. It's an increase of 116.67%. And just again, to put that into some context, 100 shares of this company would pay you £20.90. And to own 100 shares of this company, you'd be looking at around £1,509. Taking a look here on Dividend Max, we can see that they pay twice a year, interim payment and a final payment. Some information on their dividend per share, which we've just discussed. The previous dividend was this, the next dividend is this, so that was an increase of about 117%. The yield is a respectable, not a massive 2.9%. And if we take a look here, now this is a really, really nice picture. And I've never really looked into this company. I don't know why I haven't. I don't know whether I should do more research on this company, but I like what I see here. Since 2006, pretty much, if I'm not mistaken, with a few dips perhaps, they've increased their dividends. They then cut their dividends in 2020, which is a shame, but as did a lot of companies, and they're back up and running now. They haven't put their dividends back to where they were pre-pandemic, but hopefully we'll see them get there. And they're actually paying in July and January, so 2 payments split quite nicely over the year. So let's just see how they've been performing. Over the last 1 month, oh, that's a nice sign. Okay, that's really good. 17.25% they're up. 6 months, they're down by 5.41%. Year to date, oh, that's not great, down by nearly 27%. 5 years down by 51%. And let's max out here. Okay, so it looks like they've had a good run here. Obviously, it always looks better when you zoom it out, doesn't it? But since April 2021, we've been going down with a few peaks, but mainly downwards. Sorry about all the ads on this page, but I saw this article from Forbes, which was a really, really promising sign. It was published on the 8th of November, and it says FTSE 100 stock ABF, so Associated British Food, rises as Primark profits rocket 136% year on year. That is really, really great to see. And I'm sure if Primark keep doing that year on year, then ABF are going to definitely benefit from that. I'll try and remember to link this article in case you're interested in the description below. But if not, it's on Forbes. And yeah, you've got the title there anyway if you want to read about it. So those were 3 stocks that have announced a dividend increase. If you've got any more that you want to add, drop them in the comments below. And of course, if you're buying any of these stocks, let me know also. I'm definitely going to have a little look into a few of these that I haven't already got. But like I said, I've got Unilever and I definitely plan to add to that. So very happy that they have also increased their dividends. Hope you've enjoyed this video and I'll be back soon with another one shortly.